too.
Okay.
It's another week. Jerome D. Love in Houston, Texas. How you feeling, my
Yes,
brother?
sir. Man, I'm feeling good, man. I'm really excited about our show today. Excited about what is Rich Live in general, man. The testimonials, the comments, man. People, you can tell we're really helping people, including myself. That last week, man, I sent my kids that stuff and said, y'all need to get these free Google certifications. And I'm pretty sure I'm gonna be sending them some scholarship information from today's show. So this is helping. If it ain't helping nobody else, it's helping me.
Well, we got two great people. Hi, I'm Rushion McDonald. I'm the co-host of this show with Jerome D. Love. Pull up our guests we have on the show before we get started. Ashley Christopher, as we was talking about the HBCU scholarships, she facilitated over 10,000 HBCU registrations to attend HBCUs and nearly $100 million. Wow.
Wow.
That's a number. That's a lot of black people or people you'll put in school. And Breonna Johnson out of Chicago, talented legacy in insurance, life insurance, how you can build wealth with insurance. She's going to teach us how to do that and also break down the different insurances. I think that's important because term, whole, universal, all those policies out there, variable. I can't forget variable. She's going to break it all down to us. Also tell us how to get involved. But let's get started. You ready, Jerome?
I'm ready. Let's go.
Before we get started and introduce Ashley Christopher, I want to introduce the power of HBCUs. Can you pull up that slide, Marcus? Well, a lot of people don't know about HBCUs. They know about the halftime and the bands. They know about athletics, but 70% of the black dentists graduate from HBCUs. 80% of the black judges graduate from HBCU. 70% of the black doctors, 50% of the black lawyers, 40% of the black engineers, 40% of the members of Congress, 50% of the black public school teachers graduate from HBCUs. That number's changed. It's actually 33% of black STEM professionals come from HBCUs, and 75% of the black veterinarians come from HBCUs. I wanted to introduce that information, Jerome D. Love, before I bring up our first guest, because she is 100% a huge advocate of HBCUs and has been turning lives. Her guest, she founded HBCU Week in 2017 to promote enrollment in HBCUs. The cornerstone of her program is a unique college fair where students can gain immediate acceptance, on the spot, and scholarships based on their eligibility. To date, she has facilitated over 10,000 on the spot, which means when you go there to the fair, you can get registered and awarded more than $120 million in scholarships. Please welcome to What is Rich Live, the one and only Ashley Christopher. How you doing, Ashley?
So good. Thank you guys for having me today.
Thank you for joining us, Ashley.
Well, how many kids you got in HBCUs?
I got 3 right now. 3. Next Friday, it'll be 2. So my daughter's graduating from Howard. I believe that's your alum. Yes. She's got a finance major. She has a job lined up with JP Morgan, but she really killed the game there, really flourished, freshman council president. She was on the student senate for 2 terms. I mean, I ain't even got enough time to tell you all the stuff she did over at Howard, but man, it was an amazing experience. Made me question. I went to UT. I love UT, but I did not get what she got. Let me just say that.
Yeah. And my son is actually a freshman at Howard too. So I share the same sentiment. I mean, it runs long and deep in my family. We love HU.
Yeah. Let's talk about how I got started with you, because everybody is a dreamer. Everybody wants to make a difference. And you started this in 2017. Why did you start the HBCU Week? And did you dream the growth that you're dealing with now?
Well, I started it, Rashawn, based on being here in the city of Wilmington, connecting with the mayor. And he asked me to come up with some programming that was pointed at our underserved communities. Mm-hmm. I mean, I knew that my HBCU experience gave me so much. And I wanted all the students coming behind me to have the opportunity to feel and receive the same things that I did. I never dreamed that it would be as big as it is today. It just started as an initiative to provide access to the opportunity of what HBCUs provide and to get the, knowledge and information about what the cultural experience would look like.
Okay, now that was in 2017, correct?
Yes, 2017.
Okay. Then you brought this famous guy on board.
Yeah.
In 2019. And how has he played a role into your HBCU platform? Because I've seen you on First Take. Okay.
Oh, yeah. Oh, my gosh. Stephen has been such a gift from day one. We invited him down to our gala back in 2019 to see what HBCU Week was really about. And he really enjoyed it. And, so much so that he agreed to be our ambassador. So since then, he's spreading the word. He's making donations. He's telling people to make donations on his large platform over at ESPN. He's connected us with the Walt Disney Company. We've done HBCU Week at Walt Disney World twice. So Stephen has been a really, really integral part of the success and growth of HBCU Week.
I'm not going to be greedy, Jerome. We got any questions for you? And I'm talking about trying to get scholarships for your kids. I'm talking about you got any questions in general.
Yeah, I'm gonna wait on that. I gotta butter her up first before we go there. So, but no, I want to just kind of talk about that first slide that Rashawn put up. I want to talk about my pastor, Dr. Dana Carson. Brilliant man, 3 earned doctorate degrees, executive MBA for Duke, churches on 3 continents. But many people don't know he was a high school dropout, south side of Chicago. He graduated from a trade school and his life was about to go in a totally different direction, but someone directed him to Wiley College. He went to Wiley and the rest is history. Once again, 3 earned doctorate degrees, an executive MBA from Duke, a master's. He's written 260 books, but he was a high school dropout. Yeah. But it was an HBCU that rescued him. So talk about how HBCUs are really changing the narrative in the lives of people that are really been forgotten and given up in many perspectives.
Yeah, these institutions are built for all of us. And the thing that I wanted to communicate most to the students in my hometown is that college is an option regardless of your circumstances. There is an HBCU out there for every student of color. I don't care what your background is. I don't care what you've been through. You will find your tribe. You will find your calling. You will find your purpose, and you will thrive at an HBCU. I'm a living testament. I was an okay college student. Very rebellious in my high school years, did just enough to get by. But I wanted to go to Howard, right? An arrogant 16-year-old mind. I'm going to Howard regardless of how I'm performing in high school. I applied, rejected. I called, asked for another opportunity, and I wrote a letter advocating to reverse the decision, and it worked out in my favor. So I'm one of those students too that didn't necessarily deserve the admission, but I think I made Howard proud.
Awesome.
What was it about?
I want you to remind the audience, Jerome, that they can write comments and we'll respond to the comments. This is a live show. Yeah. If you have any questions about HBCU, how to get in HBCU, how to participate in these scholarships that are being offered by Ashley, please put them in the comments. We'll bring them up on the screen because that's what this show is about. Getting your kids or getting yourself in an HBCU enrolled. And secondly, if there's scholarship opportunities, you will be made available. We'll make them available to you. Jerome, I apologize.
Well, no, I was just wanted to ask, what was it about Howard and how were you introduced to Howard? Why were you so enamored with Howard in particular?
Well, first it's Howard, right? Is there really? It's Howard. So both of my parents encouraged myself, my sister, my brother to choose an HBCU. Neither of them had that experience, one graduating from Temple and the other from Drexel. So they encouraged us to look in that direction. And at first, to be honest, my choice was Spelman, but I was enrolled at an all-girls Catholic high school. So I didn't want that experience again. So Howard quickly became my first choice. My sister's 2 years older than me. She was at Howard. She was on the Ooh La La dance team. I went down for homecoming, saw her perform at the football game, and the rest is history. I had to be there. There was no choice.
Yeah.
Well, let's talk about this enrollment and how that works. Now, you do these fairs. Tell us how it's set up and how you're able to enroll students on the spot at the fairs, and how do they qualify for these scholarships that you're giving out?
Absolutely. So we have a college fair every year, an HBCU college fair. So we invite all the HBCUs to come out and all of our local high school students. It's since expanded beyond the region. People come from everywhere to our college fair. 2 years ago, we had about 20,000 students, got a little out of control. So we had to peel it back a little bit because it's like, you want to have the quality, you want the students to be able to engage with the recruiters. So we're tethering around the 6,000-7,000 mark with students since then. And it's worked out really well. But what happens is you talk to the HBCUs, you engage with them, you tell them your resume, what your grades are looking like, your extracurricular activities, and they evaluate that on the spot and let you know if you can get an admission. And at the same time, they'll tell you what money you qualify for. So all of our students that get on the spot college acceptances get something monetarily from the HBCU on the spot. It could be anything from $5,000 up to a full ride. But in addition to that, we have a lot of corporate partners who have leaned in with millions to provide more scholarship dollars that students can apply for each year.
Wow. She says it so casually, that means somebody who's been doing it a lot and been changing people's lives on a regular basis. But let's bring up some of these scholarships to the screen that can go to your website. That's hbcuweek.org and qualify. Can you bring some of them up, Marcus? And so she can comment on it. The STEM scholarship from FOSSI. It's FOSSI, right?
Yes, this is our most popular scholarship. So I was blessed to be able to broker a $40 million partnership with the American Chemistry Council. So 1,000 students will each receive a $40,000 award to study STEM at their choice HBCU. We've given out about 700 of those scholarships so far. It's no secret that North Carolina A&T is our premier HBCU STEM school. We've had more than 200 students enrolled at North Carolina A&T with this scholarship. So very proud of the FOSSI scholarship.
So they can go to the website. Hold up. They can go to the website and apply, or how do they apply for that?
Yes. So our scholarships, unfortunately, they're closed right now. They open every September during our college fair. So this year they will open on Friday, September the 18th. And the student will be able to click on whichever application. I encourage students to apply for every single one that you qualify for. And they don't close until the middle of February.
Okay, cool. Now you have the AstraZeneca scholarship. What is that?
Yes, so that is a chemical company here in Delaware. They have been a fantastic partner of HBCU Week since we started. They've given anything from $25,000 awards up to a full ride. They have so far given $132,000 to 3 different students to have full rides. So they have anywhere between that $25,000 mark up to a full ride. So I encourage students that want to study STEM as well to look at that AstraZeneca scholarship application.
When you look at the different scholarships that are students and they're available, like this one, arts and entertainment scholarships. So you have a diversity of scholarships to offer, and that's important, correct?
Oh, absolutely. Because you have students that want to study all kinds of things. And the Arts and Entertainment Scholarship was really born because there are a lot of students that not only want to be talent, but want to create behind the camera. And when you look for scholarship opportunities in the art and entertainment space, they're very scarce. So I made the opportunity to really start fundraising for students that want to study art or acting or marketing, anything in that space to develop their entertainment career or at least jumpstart it. So that application actually went live for the first time. We're actually calling 5 students this weekend to let them know that they got the award.
Wow. So that's how it happens. You just call them up and they apply?
Oh, yeah. Very personal. So when you get a scholarship from us, we're calling you. We are calling you. We're talking to you.
You hear that? You hear that?
Yeah. Answer your phone. Take it off.
Jerome D. Love. They can be calling. They can be calling you. Okay.
Hey, you gonna get a call from me first.
Yes, we call all of our students. That's one of the things we're very committed to doing.
Jerome, you have a question? I don't want to hog it now.
So tell me, what are the typical criteria? Is it GPA? Is grades? What is the typical criteria?
So we don't make our application process too stringent. We ask for the basic information, name, where you're from, high school, but we want to know what your transcript looks like, the extracurricular activities in high school, and why you want to go to the school that you want to go to and why you deserve the scholarship. We don't necessarily ask for students to prove what kind of financial background they come from. And that was a little controversial when we started that, but I decided to stay in that space because there's enough barriers of entry for Black children already. And just because you come from a middle-class family doesn't mean they have $64,000 a year to send you to Howard, right? So we make sure that we ask the student if there is a financial need, but we do not make them prove by way of FAFSA and bank statements and all that stuff, like how much money they have. So we don't evaluate the financial background of the student.
Do you have scholarships available for students that are already in, or not first year students, but let's say they're sophomore, junior? You have scholarships available for them as well?
Yes.
Jerome, is that your dog, man? Whose dog is that? Whose dog is that?
That's not my dog.
That's actually I'm dog sitting right now. I'm dog sitting, and he's tapered off. Yeah, I'm sorry about that.
Okay, back to you, Jerome. I had to intercede. This is live. This live TV.
Yeah, he has no respect for me. Banks has zero respect for me. So,
okay, cool. Jerome.
Yeah. Oh, you asked about the qualifications
for sophomores and juniors.
Yes, so we do have scholarships available for current students as well. Actually, that arts and entertainment scholarship is going to 2 students that are current rising sophomores. So we have made it available to current students and graduate students at HBCUs as well.
Okay, awesome.
Yes.
What are a couple more scholarships? I apologize. There was a couple more scholarships that you were going to bring up on the screen. I want to make sure we get through the whole process.
I think that was a question too.
The Althea Gibson, the USTA Althea Gibson HBCU scholarships. Give us some background on that.
Yeah, this one is really special. So we have a relationship with the United States Tennis Association, and they wanted to make sure that they leaned in to provide dollars for students that go to HBCUs without any particular major required, but they want to know that you like tennis at least a little bit. Did you play when you were a kid? Did you play? You don't even have to play at the collegiate level, but they're looking for students that are athletically inclined, that enjoy the game of tennis. So we're going to be calling students about this one as well. There will be 4 students getting this award, 2 young men and 2 young women. So we will be giving them calls this weekend as well. There'll be a lot of excited students over this weekend.
And one more scholarship after that?
Yes. So this scholarship is really special to me. So Mayor Mike Krasicki was the mayor of Wilmington when I started HBCU Week, and his support was so special. He moved into this in a way to ensure that I just had a runway to take off to build this, and he would be there to catch me if I fell in any way. He called his friends, he called his, corporate buddies and all the people that he knew to say, hey, you guys got to lean into this. This is a fantastic program and it's very meaningful. So we created a scholarship in his name just for that. This is not in memoriam or anything like that. Mayor Mike is still alive, right? But we made this for him just to pay him homage, because it would absolutely not be what it is today without Mayor Mike.
We have a question on the screen right there. Ashley, are the scholarships given to the students directly or paid to the school they are planning to attend?
Yes, so we send the money directly to the school on the student's behalf. So we make sure that we are attacking that tuition, that room, that board, those fees, all of that stuff to make sure that those numbers are decreasing. So we do not give the money directly to the student, but it does go to the school.
Jerome?
What about, for instance, my daughter, first year she was staying on campus. Second year, they had her staying on campus, but it was in Maryland. And they were going to bus her in because there was a housing shortage. So it was an apartment complex that Howard owned in Maryland. So we opted to get her a condo, or she rented a condo that was close to the campus. In a situation like that, if you need money for housing, how does that happen? Would you pay it to the student then, or is that like a special case? How would that work?
So only if the housing complex is owned by the university. So we have to make sure it goes directly to the school on behalf of the student. We do have an emergency scholarship fund for students that are in a bind, like, I'm going to be purged from my classes. I need about $6,000-$7,000 just to stay enrolled. We don't know if that's, well, no, that goes directly to the school as well. But those emergency situations are usually directed to, the tuition payments. But we don't give students directly the money directly to the student. We don't do that.
Now, the interesting thing is what you're doing is changing lives, Ashley. You're very humble, and I respect that, and I appreciate that about you. The relationships that you built with Disney, I've been to the event. I've seen 10,000 kids. But you know what I've enjoyed the most? The parents going with the students. Talk about that, seeing that interaction with the parents there. It's kind of like a college day. They can walk to Howard, they can walk to FAMU, they can walk to Grambling, they can walk to all these different booths that are available there at your college fair for these students to attend. They don't have to travel all over the country. They can just come to your college fair, correct?
Yeah, absolutely. We love to see the parents there. And what we do find is that the parent sometimes is more excited than the student when they get the scholarship dollars. I mean, they're the ones that are probably going to have to foot the bill anyway, right? So the students, they're happy about receiving the money. But the parents, those are the ones, I mean, they're crying. They are just in tears, just in shock. And just really grateful for the opportunity to mitigate that student debt as much as they can.
And with that being said, the whole process of sponsors, because I'll be remiss, you got to have sponsors. You got to have people who believe in your process. Talk about the sponsors and their power to change lives and being loyal to your vision.
Oh, yeah. The sponsors have been great. We look for sponsors who have missions that are aligned with ours.
Okay.
So I don't really believe in like a transactional relationship where it's a company that's like, oh, we need to check this box, here, this money, you won't hear from us again. No, we like to be with people that love our mission and support it and appreciate it. And we've been able to build such a great community of corporations that actually love what we do. They come back year over year to continue to support it. And it helps that, they're seeing the return on the investment. They're seeing the scholars come out with great internships and jobs. They're seeing them have, internships on Wall Street, graduating with 3.8, 3.9 GPAs, right? Being involved in all the campus activities. So it's really something special to see. And they enjoy getting the stories and the feedback of the students that do take advantage of their scholarship dollars.
Now, I got something to say to Jerome. Jerome, you said you got how many kids in HBCUs?
I got 3 right now.
But you're only talking about Howard, though. No. You're only talking about Howard, though. Okay, just not even showing love to the other HBCUs.
North Carolina A&T. Okay. And then I also got one at Xavier. Now, my Xavier one, she actually runs track. She runs the 400 and the 800. So.
I'm glad you said that because we are announcing in June
scholarship.
Our HBCU Week Sports Scholarship exclusively for athletes. Exclusively, right?
Exclusively. Send it to me. Jada Love, Xavier University. Go to hbcuweek.org today.
I'm going to be looking for her, okay? It goes live in September. And because athletics are kind of fickle, students transfer, you just never know what's going to happen long term. You can apply for that year round. You can apply in September, October, November, whenever you need it. You just send the application, we evaluate it, and hopefully we can help your daughter. We've been doing very well with fundraising, and I have to give a plug to Stephen A., who gave us a very good donation to our sports fund. So thank you, Stephen, again.
Yeah,
my boy, Stephen A. See what happens, man, when they said if you didn't mention it, was stuck on Howard. I know she goes on Howard. You know, talking.
We love Howard. We love Howard.
Close us out.
So tell me this. I know I have a good friend who worked on Wall Street for many years. He just retired. He did recruiting for, I won't say the name of the company, but Global Bank. Okay. And one of the things that he told me was that when he started, he noticed that over the years, the percentage of non-African-American students in the recruiting programs began to grow. And he was noticing that other cultures were kind of viewing, okay, the HBCU route is an easier path for me to get connected to some of these global brands and companies than going to the Harvards and Stanford, What are you seeing there? And are your scholarships exclusively for African American students?
Oh no! All you have to do is go to an HBCU. We do not shut anybody out. I mean, that's not the HBCU way, right? These schools or institutions were built because we were prohibited by law from getting a higher education. We had no other choice. Yeah. But we don't actively shut anybody out. I mean, there is a majority white HBCU, Bluefield State University, 90% white, West Virginia. Right. So if there is a white student that applies, I have white students that come to our college fairs all the time. Yes, we do not shut them out. They're equally invited. Yeah.
Okay. Awesome.
Well, I'm having camera problems over here, Jerome. I'm gonna talk to my crew over here. But Ashley, I want to thank you for coming on the show.
Thank you.
HBCUweek.org. She's fantastic, and you're changing lives. I've been knowing you since 2019, and you've never disappointed me. And I expect, and now you got him excited about the sports scholarship.
I'm very excited. I'm very excited.
I'm tired of people coming on the show that you just personally benefited from, Jerome. Every week.
Exclusively for athletes. Please let her know. Friday, September 18th.
She gonna know. You ain't got to worry about that. So.
Plus, he gonna have you down at his Texas Expo next year. Okay.
Yes, we gonna work that out. Now, I do got to ask accounting students, North Carolina A&T, what would be the best fit there?
So we have an NFL scholarship. That one is for any major, right? So there are a few scholarships that you will see on the website that require a specific major, but there's a good amount that it doesn't matter what you're studying.
I love it. Awesome. Ashley, thank you for taking the time on Saturday.
Thank you so much, Ashley.
Thank you for having me.
And you didn't disappoint. You're fantastic.
No, thank you for having me. This was fun. It was nice to meet you as well, sir.
All right. Thank you.
Hey, Jerome, now don't hog our next guest, with these personal needs, okay, because she's out of Chicago. And she's life insurance, wealth builder, and everything. And I know I want to give her as much time as possible. Let's bring her on the show right now. But before we go, man, what did you think of Ashley, man? She really stunned you with all that information.
Oh, man. I think HBCUs are doing a phenomenal job. I think it's unfortunate some of the notions and stereotypes that are perpetuated and people don't recognize how these HBCUs are really changing lives. And I just commend her and her organization, Stephen A. Smith, and all the HBCUs. Kudos. I can't wait till I can become a billionaire and I can throw out some scholarship money like Robert Smith and sponsor a whole graduating class because they're doing some amazing things.
Well, let's get on to our next fantastic guest who's giving us our time on Saturday. Our guest is on the show to discuss generational wealth building using life insurance. Her company, Legend Life Financial, a national financial services firm dedicated to helping families and entrepreneurs protect their legacy through life insurance and financial education. She is licensed in 30 states. That's why, from a national perspective, that's why she's on this show, and has mentored or trained over 300 insurance agents. Please welcome to What is Rich Live, the one and only Brianna Johnson. How you doing, Ms. Johnson?
I'm good. How are you? Happy Saturday. I really enjoyed the first part of the show. It was awesome. Okay. I'm like, oh, I don't have kids, but I have nieces and nephews, and all of these ideas was coming through. So I'm like, okay, she was awesome.
Now, I'm gonna let Jerome. I hogged the interview a lot. Now, Jerome, till he started one of these personal games, Track Star, Howard. Now, she has insurance, and he's a real estate investor. So talk about. I would let you have the first question, Jerome. Come on.
So I'm gonna start with a story, then I'm gonna ask you a question.
Okay.
A good friend of mine listed his house with me. It's probably about 10, 12 years ago. And he had owned his house for about 15 years. He was a broker with State Farm. And I was baffled. He had owned his own home for about 15 years, made good money. And when I did his net sheet, it said he was gonna make zero profit. And I was baffled. And I said, man, what are you doing? Why you ain't pay your... He said, well, I take my money. He had his house set up for interest-only payments, and he was buying insurance policies. And for him, the equity in his home was in his insurance. It blew my mind. So tell me how that works. If you know, I don't know what he was doing. And I know you may not know real estate like I do, because I was arguing up and down and real estate was the way to go. And he said, no, I want my money in my insurance. Tell me how he did that, if you know, and what are the pros and cons?
Okay, so I've never heard of someone doing this, but what I can say is 9 times out of 10, he either had an IUL, which is an index universal life insurance policy, or a variable universal policy. Now, the biggest difference between the two, just depending on what he had, an IUL, which is the index, those policies, they're tied to different indexes within the market. So we got S&P 500, BlackRock, just to kind of name a few. So when the market goes up, the portion of his monthly contribution that's dedicated to cash growth, it will ride and go up and grow with the market. Now, when the market goes down, because we know that the market goes down sometimes, and so there's a floor. So his cash is protected. It still gains either 0.25% or 0.75%, depending on what insurance companies he's with. Now, if he had a variable universal policy, those policies are a lot more riskier. That's where you can literally, a portion of your monthly contribution goes towards different stocks, kind of like a mutual fund. And there are different managers that manage your portfolio because the risk is much higher. Now, with variable universal life insurance policies, because the risks are much higher, there is no floor with those, so you can lose a lot more money. So I don't know which way he went, but 9 times out of 10, he went one of those routes for sure.
So, Rashawn, let me get one more question in, and then I'll tell you. So you intrigued me with one word you said. You said growth. Yes. When I think of life insurance, I buy $1 million policy, it's $1 million. Mm-hmm. But sounds like you're saying you can buy $1 million policy and it grows in value?
Yes, it can grow in value if you have an increasing policy. You got to know the difference between a level policy and an increasing policy. So with a level, that means that the death benefit will stay the same for the entirety of the policy. But when you have a policy that increases every year or every 5 years, your policy will actually grow. It can go from 1 million to 5 million to 10 million, just depending on how much you're putting into your policy.
Okay. So you're saying that you can invest, you can not only pay your premium, but you can invest money into the policy and grow the size of your policy.
Correct. That is correct. Depending on how it's structured. You got to have an agent like myself that knows how to structure your policy correctly, because
we only sending them to you now.
Okay. I'm here for it. I'm here for it.
Here's the first thing. I know Jerome. I've been knowing Jerome a little bit, and when you his mind is working right now because you struck some financial nerves with him. Come on, Jerome, spit it out. What's in your head right now?
Well, no, I'm thinking about. So here's 2 things I'm thinking about. Right. One of the guests on the What Is Rich docuseries, Dr. Tyler Jacobs. He's episode 9. He talked about how he built his business, and he said when he didn't have a business to buy, he would buy insurance policies because it was almost like his savings account, and he could draw money out of that. Mm-hmm. What has intrigued me about that, going back to our last segment, I got 3 kids in college now. Okay. So I got a bunch of real estate, but I'm not as liquid. So it made me say, man, maybe I should have got some insurance and real estate as opposed to just real estate. So talk about the policies and how you can withdraw funds from it, and then it not go or deter from the death benefit. Does that make sense?
Yeah. So the biggest thing with these policies, people have to understand, you never want to withdraw from them. You only want to borrow. Like rookies withdraw, because if you withdraw from the policy, then it's definitely going to decrease the cash value within your policy. You're going to get capital gains tax, a whole bunch of fees, right? So let's say, for easy math purposes, you have $100,000 in your IUL cash value that you can pull from, right? Mm-hmm. And people use them like their own banks, because you can literally go to your insurance company, say, I want to borrow $50,000 for whatever it is you want to borrow the $50,000 for. Now, the cool thing about this is when you borrow, the insurance company is still going to recognize your account being at that 100,000, right? So if the market does well that year, and let's say you're in a good index, you don't have a cap on it, and it does 15%, that 100,000 is going to grow 15%. Although you took 50,000 to do whatever it is that you wanted to do. Wow. The insurance company, they look at it as if, oh, he's going to pay that $50,000 back. So we're still going to recognize his account at 100. If you withdraw, then you get fees, and then now your account is recognized at 50,000. Okay.
Well, what if you die in that period? What does your family get?
Your family? No. Okay. So depending on what the death benefit is, right? Mm-hmm. So it will subtract from the death benefit, but that's why it's important to have multiple types of policies. If you're looking for a policy for max death protection, you need to have a term policy that allows you to have, like, for example, I got my first $1 million policy when I was 24, paying $35 a month for it. Mm-hmm. I understand that you can get a lot of coverage for term. So I have that type of coverage for max protection. People usually get IULs and variable universal life insurance policies because they want to use that cash while they're alive. So you can stack your policies and use them for different reasons. And I educate my community a lot about that, and just people as well.
Wow.
All right, Rashawn, this is another one. You're going to have to give me this information because I got more questions. So I'm not going to hog this one.
No, Jerome, because I love your questions, because we invite our viewers. If you have a question for Brianna, please go in the comment section, insert your question, and we put it on the screen. Sometimes we get so excited, we forget to tell them they can participate too. Because Jerome, he be out here just highlighting all his personal gains and needs. Yeah. And people go, well, Jerome just asked the question I wanted to answer.
Yeah.
But let's talk about this for a minute, because insurance, especially in our community, has such a undefined term. Like you said, term life, and then you start getting into universal, whole, and all these other policies. How can you educate us to how we should introduce ourselves into insurance, and before we get into the universals and the whole policies? Talk to us, Brianna.
That's a great question. So I always tell people when they ask, what's the best type of policy? I'm so confused. What do I need? Well, I assess their current situation, right? Mm-hmm. Everybody's situation is completely different. So if you're in your younger working years, between 25, 55 or 20, 55, you have children, you have a mortgage, or maybe one day you want to be a homeowner one day, or you have a spouse that depends on your income, you need to get a term policy. Why? Because term is $2 per thousand. Like I mentioned, I got a $1 million policy when I was 24, paying only $35 a month.
Right. If
I would have gotten a whole life policy at that time, it would have been triple, quadruple that, maybe like $300 for $1 million worth of coverage, right? Mm-hmm. So now you got to understand that with term, the price of the policy stays the same for a specific period of time, which is great. Because one day your kids will grow up. They're not going to stay young forever, right? They're going to become 18, 19, 20, no longer depending on your income. So you can protect your income for that term of 20 years to 30 years. You'll pay off your mortgage. You'll pay down your debt. You'll purchase a home. You can accomplish, and you should accomplish, a lot within that specific period of time. That's why term is so powerful. It's the cheapest form of insurance, and you can have so much coverage. Now, with whole life, the price of the policy stays the same for your entire life. It builds cash value. People really love it. I love it too, but I feel like there's a place for it. I don't want people to get tricked out of their spot thinking, okay, I'm going to just get a whole life policy now because my mother or my grandmother told me to get it. Although you have children, although you have a spouse, although you have a marriage. So you will settle for a $50,000 whole life policy when you have all of these people depending on you. You're doing an injustice for your family. You don't want to settle. So you can stack and get a term, and you can get whole life at the same time. But the price of whole life policies are a lot more than term. They're about $18 per thousand. So that's the difference.
You know, it's interesting you said that, because when I first moved to Houston, 25 years old, got married, had a kid, I got a term life policy. What intrigued me about it was, one, it was cheap. But then also, when I looked at the term, I said, okay, 20 years, I'll be a multimillionaire. So by then, I won't need the insurance, you know? That was kind of my thought process, but you kind of sort of, I would say, validated that thought process because it's for a specific term. And my thought was, if something happens to me, I want to make sure my wife and my children are taken care of. But the question I have now, I'm trying to figure out what's the role of the whole life. I know you gave an example, 50,000 is going to be a higher amount. It's a fixed amount. Mm-hmm. That doesn't seem like a lot. Why would someone pay that amount of money for 50, 60 years to get a $50,000 policy?
So I tell people this, you know that the price of your term policy is going to increase significantly after 25, 30 years, right? So if you're worried about at least securing something and you want to have 100,000 or 200,000, or if you have an amount in mind, you're like, I just want to have it because what if I outlive my term? Cool. You can secure a whole life policy on top of your term because today is the youngest we'll ever be. So this is the cheapest insurance will ever be. So this is the perfect time to get it because every single year that we wait, the cost of insurance increases significantly. So it's not mandatory. I feel like it's more of a extra point of insurance for people, right, just to know like, okay, at least I can have something when this spikes up. Now, also you have to keep in mind with your term policies, you can convert them before the term is up to a whole life policy. You have that opportunity, but you have to keep in mind that the longer that you wait to convert it, right? Let's say you have a policy that's $1 million policy, you're paying $35 a month for it, and your term expires in 20 years, and in 20 years you'll be 42, mm-hmm, right? Mm-hmm. So when you're 40, and you tell the insurance company, I want to convert my policy, they're going to say, okay, how much whole life can we give her now that she's 40 years old for $35 a month? It's not going to be that much. It'll maybe be like 5,000, 10,000, right? So the quicker and faster you move on securing your policies, the more you'll have the opportunity to have a lot more coverage because it's only going to get more expensive as we get older.
She can talk. I love it. I love it.
What are you seeing with high net worth, like multimillionaires, billionaires? What's typically their strategy?
So it just depends on their risk tolerance.
Right.
They'll get an IUL if they're like, okay, I want to make sure that I don't lose no money if the market goes down. I want my money to be safe. But if some people are a little bit more riskier, they'll do a variable because that's a lot more risk, but they have the opportunity to grow their money a lot more because they have a manager with those type of policies. So, yeah. Okay.
Let's talk about this for a minute. Like you have going to your website, you have different programs, legendlife.com. Mm-hmm. And you train or mentor agents, insurance agents. Talk to us about that program.
Yeah, so I mentor, train individuals. If you're new to the industry, if you don't know anything about the industry, I teach you how to get in, certain things to look for, because when I first started about 13 years ago, I didn't know anything. I didn't know the questions to ask. I didn't know the difference between being captive and becoming a broker. Mm-hmm. I didn't know, different contract levels and what I was capable of achieving. So I teach them everything that I wish somebody would have actually taught me when I was younger, because if I would have knew what I knew now back then, oh man, the game would be totally different. But I'm glad that God has brought me this far and has allowed me to pay it forward.
Cool. We had a question right there. I think Stacy, can you bring it back up about a question? I paid $67 for. I'm assuming that's a month for $100,000 term insurance. I'm assuming she's asking your advice. Is that a number that sounds reasonable to you?
Yeah, it just depends on how old she is.
Okay.
It depends on how old she is. What is the level term? But it could be depending on how old she is. And if she was
Marcus, I need you to put up some specific slides right now. You pulled up the wrong slide. I need you to pull up a slide that talks about the insurance, the ages right here. Your life, your plan, no nonsense guide to life insurance. Talk to us about that.
Yeah, so I have an ebook for those that just want straight to the point. Like, okay, what's the difference between term, whole life, IUL? How do I properly calculate exactly how much insurance I need instead of blindly choosing these different policies and becoming underinsured? Because a lot of Americans and just people around the world are underinsured. They're dying without enough coverage, and that's really putting us behind significantly, and it's because the lack of education. So now we're living in a time and a space and a place where the education is vast and we can get it in a millimeter of a second. So I just wanted to provide that easy read. I think it's about 10 pages, super easy, and you can book a free consultation with me that away as well at the end of that book. But yeah, it's just something really simple for people to digest so that insurance doesn't seem so confusing.
And then your next slide, build your profitable insurance career through that aging course that we were talking about. Is this something, is it a 90-day course or 60-day course? What is that course?
Yeah, it's for 90 days. So I take you on for 90 days. I help you close your first 4 to 5 sales. So
you help them close.
I help them close. Yeah, literally, I'm with them on Zoom or in person. I help them close. So it's basically a money back plus make money guarantee. And it doesn't matter what agency you're with, if you're with independent, if you're captive with an IMO, I'm just here to educate people so that they can feel more confident about what it is that they're offering and selling.
Next slide, Marcus. The 90-day mentorship program, personalized mentorship.
Yep. So that's, what we were just talking about. It's 90 days where you'll have direct access to me. I teach.
When you say direct access, what do you mean when you say that, Brianna?
Yeah. So with the direct access, so if you have clients that you need help with, I'll help you with that one-on-one. Also, you will also have access to me if you have questions every single week. Twice a week, I teach classes with my agent. So I have Q&As on Saturdays. Wednesday is product knowledge. So that is what I offer.
And I want to bring up one more slide, Jerome, that registration slide. Bring that up right quick, right here. Talk to us about that. What are they doing when they fill this out? Because, people are so hesitant to fill out information online nowadays because they don't know where the information is going. Talk to us, Brianna.
So with this in specific, on the left side, this is just a needs analysis. So people can take a look at this to assess their current needs. So if you already have insurance, if you don't even know like how to calculate it, that is what you can reference to. So this is what you call the DIME, D-I-M-E. D stands for debt and death. I stands for income replacement. M stands for mortgage, and E stands for education. So when you plug in those numbers, it tells you, one, how much you need to have in your checking or your savings account today if something were to happen. Or if you don't have that, then this is how much you need to have in a life insurance policy until you have that. And that's when you become self-insured, And then on the right side is how you can scan the QR code to book an appointment. You have all of my contact information so you can, do your research on me, follow me, see if I'm real, see if I walk it like I talk it, however you want to get down, right? Yes, I've been doing this for 13 years. I call myself, definitely the $1 million agent because I'm helping people secure millions in life insurance. I'm saving them for settling for small policies and all at an affordable cost because you can get up to $2 million without taking a physical.
Wow. Now, I first of all, I want to say this, we jumped immediately into you, Brianna, and I want to apologize. We didn't ask you anything about your background. We were just like greedy dudes. So we were greedy. We just we were selfish. Can you give us a little background on you, why you got into insurance? I did my little intro. Tell us a little bit. Let's personalize this interview a little bit with you there, Brianna.
It is okay. I definitely understand. So why did I get into insurance? Well, initially I was in the fashion industry. So I started working when I was 13 in retail. At 18, I was working with Kamora Simmons at Baby Fat, travel all around with her to distribute. And then by the time I turned 21, I had 2 clothing stores combined with some hair salons. And at that point in time, I had influence here in Chicago. And I said to myself, you know what? These women, they're listening to me, they're gravitating towards me, but how can I be more impactful? So that's when I got into the insurance industry. Well, because my father, he was in it as well. And I just wanted to educate the community on the different type of policies that they should get, that they should have. So at 24, that's when I got my $1 million policy with living benefits. It covers a critical chronic terminal illness. About 3 years ago, I was diagnosed with breast cancer, and never in a million years did I think I would be a product of my product where I would have to file a claim because of what I've been telling, people across the world. I mean, the country at this point to get. So it allowed me to take a step back and really see the importance of what it is that I was doing. And my why just got a lot bigger, and I'm just super excited to be here to share my testimony, because now I'm in remission. I'm fully healed because I didn't have to struggle financially, and I feel like that's a huge issue with people when they're diagnosed with something, because even if you have benefits through your employer, you're losing anywhere from 30 to 40% of your income, but 100% of those bills are still coming in. So gratefully, I walked it like I talked it, right? Everything that I was educating people on, I actually had it, and I was able to take a step back from my business, and my policy stepped in, took care of me, and now I'm just here to take care of more people. So I'm grateful to be.
This is your testimonial. Come on now, preach.
That is powerful.
Thank you.
I want to say one more thing to you. First of all, thank you for taking the time again. Jerome and I started this whole idea of doing a live show and giving information that people can use. They can access you. Yeah. And you're changing their lives, just as Ashley Crystal was changing her life with her HBCU scholarship program. We had John Hope Bryant on the show a couple of weeks ago, and John Hope Bryant said he's so tired of these GoFundMe funerals.
Oh my goodness.
He said, if I see one more GoFundMe funeral, he says, ridiculous. Go out and get you a term life policy so you won't burden your family with your death.
Please.
You went, oh my goodness. So I'm assuming you're in line with what John O'Brien was saying.
So in line. Like, these GoFundMes is crazy. People let their policies lapse like it's nothing to it. And it's just like, please put your policies in an account, like a draft from an account that won't overdraft, because there's so much risk that comes with letting your policy lapse. Getting reinstated or getting another insurance policy isn't always possible, because if you get diagnosed with something, or if you went to the doctor and you were too chatty and you told them XYZ, now you may not be able to get a policy, right? So people are just willy-nilly with it, and it just breaks my heart, because we see people on the internet flexing, doing all these things, but when something happens, it's, oh my goodness, I need help. Oh my goodness, I need this. And I'm just tired of it. So yes, I can go on and on, but I'll just stop right there.
As we close, Jerome, I'm gonna give you the closing question there, my brother.
Well, I want to recap real quick. I want to make this very simple for our people. You correct me if I'm wrong. The 3 basic types of insurance. You got your term life. That's typically a lower cost, but it's for a fixed term.
Yep.
Great for younger people, and it's for when you're looking towards the future. Then you have your whole life. Your whole life covers your whole life. It's a flat rate, typically a lower amount. The IUL is the one where I'm a little bit confused on. And I guess, is the whole life invested in the market? Can you pull funds out of that, or is that just the IUL?
Yeah, so whole life, traditional, regular whole life, it's a fixed rate of return, right? Mm-hmm. So I call it kind of like the slow boat to China, because you know exactly what you're getting every single year. It's anywhere, the rate of return is anywhere from 2 to 5%.
Right.
IUL, there's a lot more growth potential because they're tied to indexes, but then there's a floor. So when the market goes down, you don't lose any money. You still get 0.25% up to 0.75%. With a variable policy, it's a lot of risk with that. You got a market manager there. The fees are higher, but you have the opportunity for your money to grow a lot more, because that's for the aggressive, like people who have a higher.
So that's a 4th category, or is that a subcategory of the IUL?
That's a 4th.
That's a 4th. Okay. All right.
Yeah.
But now is that universal? Now is that an insurance category too?
Yeah. Well, universal and variable is the same.
They're the same, correct? Because I have that, and mine is set and locked at 4%. That's the slow boat to China.
No.
Every year I'm getting 4%. Correct?
That's whole life.
That's whole life. That's what
Yes.
I apologize.
Yep.
I'm locked there, Jerome, and I'm good.
Yeah.
I'm good. I'm
Okay.
good. That's
Yeah.
my slow boat.
Yep. Good.
And now, as we close, I want to just thank you because first of all, it's Saturday, but it seems like you enjoy hanging out with us, Brianna.
I did. I enjoyed the first part of the show, learning, and now it just had my mind rolling like, I can maybe do some marketing for parents that are paying for their children's college education, and the importance of maybe if they get a side policy just for their kids' education, to make sure that all 4 years were paid for. So yeah, made me think about a lot of different things. I appreciate it for sure.
Well, I appreciate you, Jerome. Any closing? Because I love hanging out with Jerome because his eyes tell his host what's in his brain, and when it's percolating, it's a good thing. But this show has been fantastic. Jerome, close it out, my brother.
No, I just want to say thank you so much. It was great information, and it's certainly what our community needs. And kudos to you. And keep doing what you're doing.
Thank you.
You're fantastic, Brianna, and thank you for coming on our show. And we're gonna talk to you again very soon because I'm pretty sure people go, "Can you get the girl with the hat on back on?" They will talk about that shit because black people don't remember names. They don't remember names.
Yeah, I get it.
Thank you, my friend. Thank you for coming on What Is Rich Live. I appreciate you. Woo, that was fantastic, Jerome. Jerome, yeah. I don't know what I'm gonna do with you, brother. I really don't know, man. This show for everybody else, not just you, Jerome.
Yeah. But hey, I'm reflective of our audience. So like you say, I'm asking the questions that I'm sure they want to ask. So
well, but you got a big event coming up, man.
Of course. It's our 23rd annual Texas Expo Summer Celebration. We kick off on May 15th. We have our corporate awards luncheon. We're going to be blessed with Demola and Mulligan, CEO of Red Lobster. And we got HBCU President Dr. Crawford from Texas Southern University and Texas Southern University. Texas Southern is going to be celebrating 100 years next year. So we're going to be helping them to celebrate and recognize. We have a whole bunch of people that we're going to be recognizing. We have a corporate luncheon. We have an AI and the technology and the age, business in the age of AI workshop. We're going to give away some scholarship monies thanks to our friends at HEB. So it's going to be a great event. And we're really excited, just like our guests that kind of started their businesses trying to educate and empower our community. That's exactly why I started the Texas Expo. Started my first business, didn't know nothing. I was 19 years old. By the time I was 24, I was over $100,000 in debt. And I realized most of it could have been prevented if I just knew some basics on entrepreneurship, wealth building, and finance. Thus, I wanted to create a platform where I could help others, just like our guests. And I think that's really what this docuseries is about. And certainly that's why we put together the What is Rich Live Guide to Success.
Okay, let's bring it up now. There you go.
Yeah.
It's free, everybody. Free.
So people can just scan that. I don't even know what to say. I'm speechless. It's a free document and guide. We're going to be having additional volumes that'll be coming out.
Yes.
Each of the guests have different areas of expertise, and this is volume 1. What were you saying, Rashawn?
Well, I want to emphasize that in volume 1, you have franchising.
Yep.
You have AI, the queen of AI is on there talking about AI, artificial intelligence. Then we have affordable housing, how you can get in the home with no down payment. If you're on Section 8, you can use that Section 8 monthly payment and you can get in the home. No closing costs. That's all in that guide. NACA.com. That's in that guide we providing for you for free. And then you have the Blue Money, the Smart Money Blueprint by Adonis Lockett. Talk to you how to buy homes and you're not using your money. That's what we're offering for free. It is volume 1. It's amazing that we're in a position right now, Jerome. I know our producers, he's flagging me, Rashawn, talking about a minute left. But Jerome, talk about our show that's airing today, my man.
Well, speaking of free, this show is free. This live is free. So tune in every single week. Episode 5 is Legacy is the Ultimate Asset. This is where I brought some of my closest friends to a barbershop and we had a real conversation on what it means to be wealthy. Like the first episode, owner of the Houston Astros. Some people may say I don't relate to this, but I went to the barbershop with some of my homeboys, varying levels, and we have a real discussion. And then we go to Coco D, one of the hottest restaurants in Houston, Texas, owned by a brother. And Edwin Boso, he kind of just drops some nuggets on us. Mm-hmm. So make sure right after this, tune in to Fox Soul Live. It's free. What is Rich Live is free every Saturday, 5 EST, 4 CST, 2 PST.
Yeah, I think you got it right there. I think you got all the time zones correct. But it's Bob, man. I got to say, see you next week, y'all. I appreciate you, Jerome. Love you, man. Down there.
Thank you, man.
Texas, brother. See you next week.
All right.